The IRS recently announced important income tax changes effective next year. And with these changes, you may be paying less tax. Watch today's video to find out just how much less tax you'll pay in 2023. If you like this video, please give it a thumbs up and please consider subscribing to the channel. Hi folks, I'm attorney Paul Bernstein of the Bernstein Law Group. We are an estate, asset protection, and tax planning law firm located in Massachusetts. Let's talk about the proposed or the actual changes that were made by the IRS effective next year and how that might lower your taxes. Before we talk about the details of the changes, let's look at this year's income tax rates. So for this year in 2020, we have 7 brackets of income tax rates. These are our marginal rates: 10%, 12%, 22%, 24%, 32%, 35%, and 37%. Let's see how these work. So for income up to this year, the $10,274, all income at that level will be taxed at a 10% marginal rate. So everyone that earns it up to that amount of money, the tax is at this rate, a 10% rate. Then if someone is earning funds over that, and the amounts between this $10,275 and the upper end of that bracket, the $41,000 and change, is taxed at 12%. So some of their income's at 10%, some at 12%. Then we go up to the next bracket, $41,000, almost $42,000 to almost $90,000. The amounts earned within there, 22%, and we can go up each column to see what the rates are. So someone earning $10,000 and someone earning $500,000 both pay the same tax on the first $10,274. They fall within that bracket. So just to understand how brackets work, you are taxed at this rate just for the earnings within this bracket, and so on. Now let's turn to our attention to what the changes are for next year with these brackets. So here are the changes to the tax brackets announced by the IRS to take effect next year. The 10% rate was increased by $275. So now the amount you can earn and stay within the 10% tax bracket went from the $10,274 up to just under $11,000. So now we can earn $275 more and stay within this bracket. Not a huge savings, but it is still a savings. The next bracket jumps up on the upper end by $2,950. So now you can stay within the 12% bracket up to this limit, that's $44,724. So if you're earning funds within this limit, last year this amount, so if you earned $44,725, this year, of that amount, $2,950 of it was taxed at the 22% bracket. Next year, that entire amount will be at the 12% bracket. So almost $3,000 will be at a lower tax bracket. And with each bracket, you can see there's been increases: $6,300 jump up, a $12,000 and change jump up, a $15,300 increase, followed by a $38,000 and change increase. So each bracket now, you can stay in that bracket longer with higher earnings, thereby saving money. Let's now take a minute and see how much savings you'll get as you go through these various brackets. Okay, we've talked about tax brackets. The changes, really, what does that mean as far as tax savings for you next year? Let's take a look. Because we have an increase of $275, That means you can earn that extra amount and stay within the 10% tax bracket, meaning you're saving 2%, the difference between the 10 and the 12%, because this stays in that bracket. So $275 times 2%, $14.50 savings. Then for the next amount of money, if for those income earners that make $44,724 or more, that's almost $3,000 more you get to earn and stay in the 12% bracket instead of jumping up to the 22% bracket. That's a 10% spread. So we take that additional amount, the $2,950, multiply it by 10%, and for anyone earning that amount, they're going to save an additional $295 in taxes next year. And by the way, this is for individual tax filers. If you're married filing jointly, for all these numbers, they're effectively doubled, with the exception of the 37% bracket, which is less than double. But anyway, for an individual taxpayer, if you're married, understand that your savings will be greater. Then for someone earning up to $95,374, the amount in that bracket is $6,300 more that can be earned to keep you in the 22% bracket instead of being bumped up like this year in the 24% bracket on that amount. The difference between 22 and 24% is 2%. So we have the savings, the increased amount you can earn to keep you in that bracket multiplied by the difference, 2%. That's $126 savings. We go up, this bracket is a little over $12,000 more you can earn and stay within this bracket, and the difference, normally this year that $12,050 increase puts you in the 32%. Next year it'll keep you in the 24%. That's an 8% tax savings. So on that $12,050 times 8%, that's a $964 tax savings. And as we go up each one, if you're earning $231,000, that's a $459 savings. If you're a very high income earner earning just under $580,000 or more, you're going to save another $764. And this isn't just, it's not you're saving this, it's cumulative. So someone earning $231,000, we add all these savings up to show what their savings are. So depending on where you fall within this income tax bracket next year, figure out where that is, and you can calculate, all right, how much savings, $1,450 plus $295 plus $126 for someone earning $95,000 starting next year as an individual taxpayer. So there's some savings there. That's good. How much depends on how much your income, your taxable income is next year. But this should give you a sense of what the savings look like for starting 2023, depending on your income. I hope you found this information helpful. And if you'd like to continue to receive information like this, please, I ask you to subscribe below to our channel. If you like this video, please hit the like button, and we look forward to talking to you in the future. Thank you.